Happy Friday. The Dow Jones Industrial Average closed up 140 points today. Everything else, average-wise anyway, was down. Very interesting, but it also supports a thesis that I've been building slowly in my mind and observing. And it seems that we are in a correction. This sloppy market, this market that is down from the high of 1,500 to 2,000 points on the Dow, is merely a correction within the marketplace and not the start of a bear market. And I'll tell you why I believe this. Money is moving within the market to other spots. It is not bailing out of the market. When you have a bear market, no stocks are good. They throw the baby out with the bathwater, as they say, and everything heads down. But we're seeing some strong spots in the marketplace. So it's my belief that we're correcting, and properly so. We're correcting a lot of technology stocks that have become stratospheric in their valuation. Very high price earnings ratios, 50, 60 times. And it leads to a very speculative attitude, because any earnings being off target can have a huge price effect when you have those kinds of price earnings multiples. Instead, what we think we're seeing is that the market is shifting gears, if you will, to a new leadership. There's apt to be a new bell cow in the marketplace. And our guess is that leadership is going to be in the rock solid, more industrial, cyclical kinds of companies that are very mundane and boring, but they provide necessary services and goods to our economy. Not everything is technology. For example, railroads. We recently bought Caterpillar tractor in a lot of your portfolios in the last few days. Kind of boring, moves a lot of dirt, but if we have an infrastructure buildup, if the dollar continues weak, Caterpillar, being a global company, is going to have a price advantage over Komatsu and some of the other competition. We think they're in a catbird seat, and there are others. Railroads that have to move agricultural products, that if car sales build up, have to move cars. So we're seeing an energizing of a different part of the market, new leadership. So the thesis is that these kinds of companies are typically selling at 15 times earnings, 13. They're relatively reasonable, as opposed to 50 and 60 times earnings for the large technology companies. So it makes sense that the technology companies would stall and correct, and these others would come out of the doldrums and lead the market. So the money, my guess, the money to be made over an intermediate term is going to be in those laggard issues, and the other high technology, high flying companies heretofore probably into to tread water and digest gains and let their earnings catch up to their prices, so that they too will be at a more reasonable price earnings ratio. Now, it's early to call this shift. It's early to say the market's changing leadership, but I believe this is what is happening. And there are other signs, very interesting signs in the marketplace. Defense stocks have been on a sharp decline. Why? Because the polls have been saying that the Trump leadership is over and that the Democrats are going to take control of everything. And we know that the Democrats will not spend the money on defense. They will use the money elsewhere, social programs, et cetera, et cetera. The defense stocks have come alive in the last couple of days. And a poll that I saw this morning confirmed the fact that money managers who were polled 2 weeks ago felt that Trump was a sure loser. Something like 30%, 35% felt that. They believe Trump's a winner up to 55% as of this morning's poll. That shows that the defense stocks are up for a reason. So it's a logical market. It seems confusing. Market doesn't know what it's doing. It's up and down. Some indices are up, some are down. I think it's very logical. I think we're seeing this change, and only time will prove whether we're right or wrong. So far, the market's telling us we're right. Have a good weekend.